Hey, what if I told you the easiest way to invest is actually the most powerful? Seriously, today we're going to break down how a tiny habit, we're talking just $5 a day, can snowball into a massive dividend portfolio. I'm talking over $1.6 million. Pretty wild, right? Okay, let's get into it. For most people, the answer to that is a huge yes. It's like you want to invest, you know you're supposed to, but then you open up one of those apps and it just feels like you've stepped into a world that was definitely not built for you. And this is exactly why. You're just hit with this wall of tickers and charts and numbers, and you just kind of freeze up. It feels so complex, so intimidating, like it's designed for Wall Street experts, not for, regular people. But what if we could just slice right through all that noise? What if the secret to getting started wasn't some crazy, complicated formula, but an amount so small you probably wouldn't even notice it's gone? We're literally talking about $5 a day. That's it. That's the starting line. Because here's the thing, that small, consistent habit, it doesn't stay small for long. Over time, with the right strategy, it snowballs into, well, this, a portfolio worth over 1.6 million bucks. And get this, it's capable of spinning off thousands of dollars in passive income every single month. So the big question is, how on earth do we get there? Okay, so before we even think about touching a single stock, we have to talk about the foundation. This is probably the most important part because the biggest mistake most people make happens way before they invest a single dollar. It's all about mindset. So check out this contrast because this is huge. The beginner's mindset, it's all about trying to guess which stock is going to pop tomorrow. You get totally obsessed with the daily price swings, right? But look, successful dividend investing, it's not about predicting the market. It's about building an income stream. So you shift your focus. You stop asking, hey, is the price up today? And you start asking, is my income growing this year? See the difference? You stop being a gambler and you start thinking like a business owner. And this plant analogy, it perfectly explains why that owner's mindset is so important. Just picture your portfolio as a tiny little plant. For the first few weeks, you're watering it, you're taking care of it, and it looks like nothing is happening. But underneath the soil, the roots are growing deep and strong. And that's where most people quit. They give up because they can't see the progress. Your portfolio is exactly the same. The first payouts are going to feel tiny, almost insignificant, but they are the start of something so much bigger. All right, so now that we've got our mindset right, let's break down the core of this whole strategy. Let's talk dividends. And honestly, when you strip away all the confusing Wall Street jargon, the idea of a dividend is probably one of the simplest things in all of finance. I mean, that's really it. A dividend is just a company saying, hey, we made some money, and since you're an owner, here's your cut. It's that simple. There's no trading, no trying to time the market. It's just pure ownership. You're literally a part of the team. Okay, the absolute easiest way to think about this is with a little neighborhood bakery. Imagine you own a small slice of that bakery. Every quarter, after they've paid for flour, sugar, all the expenses, whatever profit is left over gets shared with all the owners. Well, that's exactly how dividends work. The best part, you don't have to get up at 4 a.m. to bake the bread. And these profit-sharing paychecks, they have a nice, predictable rhythm. See, most companies pay out their dividends every 3 months. You can almost think of it like a seasonal paycheck, right? You get one in the winter, one in the spring, summer, and fall. And as long as that business is healthy and making money, those checks just keep on coming. But here's where things get really interesting. See, not all dividends are created equal. And the style of dividend investing you choose, well, that's going to decide the entire future of your portfolio. So you've basically got two main paths you can go down. On one hand, you have high yield stocks. These give you big, juicy payouts right away, which feels awesome. But here's the catch. That income usually stays flat. It's like having a job that pays pretty well, but you never ever get a raise. Then you have the other path, dividend growth investing. Here, the initial payouts are smaller, sure, but they grow consistently year after year after year. This is the one that becomes a true compounding engine over time. Okay, so how do you actually find these great dividend growth companies without getting lost in a sea of spreadsheets? Well, you just need to follow three simple rules. First, do you understand the business? Can you explain what the company actually does in one sentence? Simple, boring businesses are often the best. Second, look for consistency. Has this company raised its dividend for years and years, even through recessions? That's a huge sign of strength. And third, the obvious one, is it profitable? A company can't share profits if it doesn't have any, right? Okay, so you've got the owner's mindset, you've got the three simple rules for picking stocks. Now it's time for the fun part. Let's actually put it all together and build a sample portfolio. Let's look at the blueprint. I love this meal analogy because it makes so much sense. Building a portfolio is just like putting together a balanced meal. You start with your foundation, your main dish. For us, that's a diversified ETF, something like SCHD, which automatically spreads your money across tons of great companies. Then you add your growth engines. These are your side dishes. These are strong individual companies like AbbVie, Home Depot, and Tractor Supply. And finally, you can add a little booster, for some extra flavor. That could be a stock with some higher growth potential, like AGM. And here's a look at the numbers behind that meal plan. You can really see how each part plays its role. SCHD is that stable foundation. Then you've got your growth engines, like Home Depot and Tractor Supply. Look at that history of growing their dividends and their price. It's just incredible. When you put them all together, you get this well-balanced portfolio that's really built for steady, long-term growth. So your portfolio is built. But there is one final piece of the puzzle that unleashes its true power. This is where the real magic happens. We're talking about taking your dividends and reinvesting them to create a massive snowball effect. Okay, this is absolutely crucial. When you get a dividend payment, you don't just pocket the cash. You immediately use it to buy more shares of the company. Think about it like this. Every time you do that, you're hiring a tiny new worker for your financial team. And that new little worker, it starts earning its own dividends, which then lets you hire even more workers. It becomes this incredible accelerating cycle of growth. And when you combine that powerful idea with your simple $5 a day habit, that's when the snowball really starts to pick up speed. Look at this. After 1 year, you've put in just over $1,800. Okay, but 10 years in, you're already at over $40,000. Now fast forward to year 20, it's over $250,000. And then, this is where the growth goes vertical. By year 30, that simple habit has exploded to over $1.6 million. But you know what? That big number isn't even the best part. Remember our goal? It wasn't just to have a big pile of money. It was to build an income stream. And after 30 years, that $1.6 million portfolio is projected to be paying you this much every single month. I mean, that's life-changing income that can cover your bills, your travel. It gives you incredible freedom. And this chart right here, this is maybe the most mind-blowing part of this whole thing. Look at that final $1.6 million. The tiny little sliver that came from your own $5 a day contributions, just 3.4%. Think about that. Almost 97% of your wealth came from the market doing its thing and from your own dividends working tirelessly for you, buying more and more shares for 30 straight years. So I'll leave you with this one last question, because this isn't really about numbers on a screen, is it? It's about what those numbers can do for your life. So ask yourself, what would that kind of income, that kind of freedom, what would that really change for you? That's the true power of thinking like an owner and just letting a tiny, consistent habit do all the heavy lifting for you over time.